All right, let's get right into it. Today, we're digging into a paradox at the very heart of crypto investing. It's this. Why is it that when a war breaks out, crypto prices often crash, but at the very same time, it becomes an absolute lifeline for people caught in that exact conflict? I mean, think about it. The moment conflict hits the headlines, Bitcoin's price can just plummet, trading almost exactly like a risky tech stock. And yet, in this same breath, you hear these incredible stories from inside those war-torn regions about people using crypto to survive when their financial systems are collapsing. So, how can both of these things be true? How can it be a sinking ship and a lifeboat at the exact same time? To get our heads around this, we first have to look at the market's immediate, knee-jerk reaction when a crisis hits. And really, it all comes down to fear and leverage. So the first phase is just pure, raw, risk-off emotion. The second those war headlines hit the wires, global traders do what they always do. They de-risk. They dump their most volatile assets first, and right now, that pretty much means crypto. And there's actually a name for this kind of panic selling. It's called capitulation. But in the crypto world, it's like capitulation on steroids because of all the leverage in the system. As prices start to fall, all those leveraged long positions get liquidated automatically. And that selling pushes prices down even more, which triggers more liquidations. It's a total domino effect that just flushes out the entire system. And yeah, this really paints the picture of what's happening in the short term. In those first few hours and days, Bitcoin is not acting like digital gold. Not at all. It's acting like a high-risk tech stock, moving right alongside equities as big money pulls back from anything that feels speculative. But here's the thing. While all that selling is happening on the global stage, something completely different is playing out for the people who are actually in the conflict zone. For them, this isn't about trading or speculation. It's about survival. You gotta understand, for someone on the ground, these features you see here, they're not just buzzwords from a white paper. They are literal survival tools. When your local currency is worthless overnight or the banks lock their doors, a borderless, censorship-resistant asset isn't just a good idea. It might be the only way you can protect your family's savings and get to safety. And look, this isn't just some theory we're throwing around. We can actually see it in the on-chain data. In places like Iran, during times of major unrest, there's this clear spike in people pulling their Bitcoin off exchanges and into their own private wallets. That is a flight to financial self-sovereignty, and you can watch it happen in real time. You know, this whole safe haven idea really got put to the ultimate stress test during the Russia-Ukraine war. And what's crazy is that analyses found for the people who were directly impacted, Bitcoin really did act as a strong safe haven. It even outperformed gold, the classic go-to asset in a crisis. Okay, so we've got these two completely opposite forces at play. Global traders dumping it as a risk asset and local people buying it as a safe haven. So, how does that resolve? Well, let's look at the data and see how this whole paradox starts to make sense over time. And this is where it gets really interesting. So despite that initial gut-wrenching crash, you look at the historical data, and in the 60 days after a major geopolitical event, Bitcoin hasn't just recovered. It has strongly outperformed both gold and the S&P 500. So what's going on here? Well, analysts have a name for it. They call it the spring effect. Basically, that first wave of forced selling and liquidations pushes the price down artificially low, like compressing a spring. But then, once the initial panic is over, the strategic investors and the people who actually need that safe haven utility start buying in, which leads to a really powerful recovery. Okay, so if you're an investor and you're trying to figure this out as it's all happening, how do you do it? The key is to look beyond just the price and monitor the right signals across a few different areas. You really need a framework with 4 lenses. First, you've got the macro view. Are energy prices going crazy, hinting at inflation? What's the dollar doing? Second, you have to look at on-chain sentiment. Are people fleeing to stablecoins for safety, or are they sending Bitcoin to exchanges to sell? That tells you if it's capital flight or just panic. Third is market structure. You need to ask, have all the high-leverage traders been wiped out, making the market healthier? And finally, number 4, you're watching institutional flow. Are the big players, the ETFs, using this as a chance to buy the dip? Putting these 4 pieces together gives you a much clearer picture of which story is actually winning. And this really leaves us with the big question for the future, right? As crypto gets bigger and more intertwined with the traditional system, is that initial risk asset panic just going to get worse? Or will the safe haven story get stronger and lead to faster, more powerful rebounds? For any serious investor in this space, Getting your head around this duality, that it's both a risk asset and a safe haven, sometimes on the very same day, that is everything. That's the key to navigating what comes next.